Hello, Ryan. My name is Craig Bennett, and today I'm going to be getting into the stock market versus cryptocurrency, some of the differences that you should know in case you're thinking about trading one to the other, and we can go from there. But before we jump on in, I want to mention that I'm not a financial advisor nor an investment advisor, but I have been trading the stock market for about a decade and a half, and quite a big gains there. The cryptocurrency, been doing that for a little bit too. So as far as that goes, let's get into it. First things first is technical charts, things like that, news even. Is it correlated between the two? Can you jump back and forth and whatnot? The answer is absolutely yes. A lot of the charts that you use for one, you can use for the other, so you don't have to really get new knowledge into the stuff just because you switch. Now, as far as that goes, I will tell you this, that there's a few things that you're going to deal with that is a little bit different because cryptocurrency is a newer market. This means there's more buzzwords. It's a little bit harder to research certain things. But assuming that that's not really anything to bug you and you can filter out that, then that shouldn't be a problem. It's pretty much the same thing when it comes to that. Buying, selling, stuff like that is the same. The futures, there's actually futures in the crypto world. There's other things like that. Now, it should be noted that the whatever you do trade into, note the laws within your land. And so, some areas you can trade futures, no problem. Other areas, it's actually illegal. So note that. Whereas, the same thing applies with stock market, where I can do it there, but can't do it in some other markets like the crypto market. Now, the other major thing that you might notice is the stock market, it only runs for a set amount of time per day, unless you're on Forex. It's also foreign exchanges. But if assuming that you're not doing foreign exchanges stuff, you're stuck with only this time, this date type of situation, holidays, all that stuff. It doesn't run. Where cryptocurrency is 24/7. Doesn't matter if there's a holiday. It doesn't matter if you feel bad or don't or feel great. It doesn't matter. It's always going. Now, with that one in mind, big thing that a lot of people may not notice is, especially if you're coming in from the stock market, is you might say, "Oh, this is $46,000." Yeah. Well, a lot of people might be turned off by that alone because they don't understand that in the stock market you can do fractional stocks. A lot of people don't know this, but you can actually buy fractions of a stock. The problem is most exchanges, retail brokerage firms, they don't let you do this. In fact, it's pretty much unheard of when it comes to that. In the places that actually do let you, a lot of them, the actual fees on that is so insane that most people won't do it anyways. Now, as far as this, if you got $100, you don't need no $46,000. If you got $100, you can throw it in there. Got $1, you can throw it in there. And the big thing when it comes to that is, let's say that the $46,000 doubles in price. That means that percentage-wise, whatever you put in there, if it's $1, you now have $2. If you have put in $100, now you got $200. That's a big thing that you need to note. Now, as far as that goes, there's some other things that you need to know when it comes to this, because most people know that you can use bots within the regular stock market. The big wigs do it. But the problem is because doing fractional stocks is basically unheard of for retail investors, investors like you and I. Well, the thing is using bots in that market is, that's not going to happen. So what happens is unless you got hundreds of millions of dollars that's laying around that you can invest with, the bots is useless to you. Whereas with the crypto market, guess what? You can actually use bots. And just as an example, because most people, even coming from the stock market, might not even know how some of these bots work. They might think, oh, it's a money-making machine. No, that's not exactly how it works. It's a script. So in this case, I got Bitcoin, and I set the lower value to 40,000, upper value for 60,000, and I give it about 580 to about $600. And I say for every single grid, every single line here, it needs to buy or sell that amount, and there's 34 grids. So what happens here is as it goes up, it sells. As it goes down, it buys. So when it passes the grid, in fact, I can show it a little bit easier here. So as it goes up, it sells. It triggers it, and as it goes down and hits those exact numbers, it buys. And it keeps doing it, which is all cool and all. So, and the big thing to note with this is I've been sick most of this time. In fact, more than most of this time. So I couldn't really do anything, even if I wanted to, because I had to be recovered the entire time. I'm still trying to recover to some degree. Well, the thing is I've made 4% over the past month since I turned it on, and by just doing nothing, sleeping half the time. So that's a pretty good return on investment into itself. And that 4% isn't like, oh, this $20 or whatever it may be is it's reusing it and I can't do anything with it. No, it's literally money sitting there on the exchange now, and I could take that money and buy something else at this second with it if it's still sitting there, or I can move it off and do whatever. And what this basically means on top of that is, if you do have a lot of money, so if you got like $1 million, well, what is 4% of $1 million? That's $40,000. So a month of you sleeping half the time, or for me, or you doing whatever else, I don't really care what it is, you just made $40,000. And that's in your pocket. Now, of course, you got to pay taxes and whatnot with it, but still, that is a chunk of money for nothing. So yeah, that's something that you can't do here because fractional stocks. It's basically unheard of. Whereas here, you can definitely do it. In fact, I'm pretty sure if fractional stocks was a mainstream thing within here with retail investors, I'm pretty sure it will be as volatile as the crypto market, because here it's unleashed, and that's basically what's happened. Most of the case, obviously, the institutional investors will control the market because they got trillions of dollars per company, literally. But the bulk of the trading is retail investors out there today, just micro stuff. And that adds a huge amount of volatility into itself. So that's something that you got to note into that. Now, the other thing that you need to note is on some stocks, you can get what's called dividends. And basically what dividends are is, if you hold a stock and let's say the 100 shares, and the company goes off and they make a bunch of money at the end of the year, they decide to give bonuses to people, upgrade machines, give it to shareholders, or all above, or a mixture of two, mixture of three. Well, the thing is, let's say that the amount of money that they are given to shareholders divided up with all the shares out there. And let's just say, for example, that since you got 100 shares, each share is going to get, 1 penny. That means you're going to get 100 cents right there. Dividends, the problem with dividends is they're not regular. There's no guarantee into it. There's no way of knowing how much you're going to get, when you're really going to get it, or anything like that. So it's not something to really go out of your way for. Now, of course, some companies give regular dividends, and you can say, okay, it should. But I've seen it where some people actually go off by logic, and they'll have a stock for 12 years, and 2 or 3 of the 12 years, the stocks give dividends, and the rest of it hasn't. Whether it's a mix, the first few years it gave it and then didn't, or at random points, but still, it's definitely something that you can't depend on. And there is some people who depend on it as a living. You got just so much money, and they throw it in the stocks for dividends, and they're just living off the dividends. Now, it should be noted with dividends into itself is what you're getting back is not more stocks, but it's more money. Now, that's something that's important to note, because in cryptocurrency, we have staking. It's not dividends, it's different when it comes to that. But you have soft staking, hard staking. You also have reflections. Reflections is fairly new. Not going to get too deep into it, but basically the amount that you hold and the amount that people are buying, selling, transferring, and stuff like that. There's a transfer tax type of situation. You can look into that. All crypto basically has that, except for Nano and a few others. But basically, the ones that do reflection, it takes that little bit of amount that it takes from that and gives it to everybody that's holding, and it's split up between everybody. But the more common ones is for staking. And note that reflections, some people will argue reflections isn't staking. That's still up in the air, the whole thing, especially with taxes and whatnot. But as far as staking goes, you have soft staking, which is basically you just have to have the coins in the wallet or on the exchange. And that's that. You can pull it out anytime, do whatever. And then you got hard staking, where you actually have to lock it in, whether it's a day, a week, year, or whatever. And with hard staking, basically you tend to get more out of that. But it should be noted that that's becoming less and less of a practice into itself. So note that. But in either case, if the thing says that it's something like 7% APY, and you got 100 coins, that means that by the end of the year, you should at least have 7 extra coins. Note that many places do compounding, whether it's daily, monthly, whatever. It's basically whenever you get a reward. So let's say that you get a reward once a month. Well, that has your compound effect. Every month it compounds on each other. Whereas something like algo, it's daily compounding effect. So that's something to note, is you can actually get this stuff more often, and you can get more. Now, the interesting thing when it comes to staking into itself is since you're actually getting the coin and not the actual dollar value into itself, is if they decide to the government prints more money, which devalues the overall money. Well, the thing is with here, as long as the price stays the same, the value-wise stays the same, or it goes above, I'm all good. In fact, if it goes above, then that's even better. Because keep in mind, let's say, for example, the buying power for an average dollar loses about 4% a year. So if your APY is above that, you're automatically, coin-wise, as long as it maintains the value, you're automatically going to, have that covered and then some. Now, as it goes up in value, you made even a lot more than what you would have otherwise. And if it does go down, it lessens the impact when it goes down, depending on how much it goes down and how much you get from staking. Now, when it comes to all this, I got individual videos in some of this stuff. If you do have any questions into it, then feel free to leave that in the comment section. No, I do have links to discounts and whatnot, so feel free to look at them. But again, leave questions, where, and if you want to add anything into it, leave that in the comment section. I'll see you next video. Hope you have a great day.